Imagine maxing out your credit cards and then lending yourself money to pay off that debt. Sounds absolutely insane, doesn't it? Such a situation would bankrupt an ordinary person in no time. But the United States of America is doing exactly that. The US government borrows money to finance itself. It issues bonds and then buys those same bonds back through its own central bank. On paper it looks as if the US is paying itself with money it never really had. In reality, this is the greatest financial illusion in history and the foundation of the global economy. The question isn't how clever this trick is but how long it can last. What is a bond? A government bond is essentially a debt contract. When the US Treasury issues a bond, it's saying to the buyer, "Give me money now and I'll pay you back later with interest." Bonds are considered the world's safest investment, backed by the full faith and credit of the United States. For over 2 centuries that faith has allowed America to constantly run deficits, spending more than it earns while always finding willing lenders. This system goes back to the earliest days of the American Republic. After the War of Independence, the young US government was deeply indebted to soldiers, suppliers and foreign backers like France. The first Treasury Secretary, Alexander Hamilton, restored trust by refinancing those debts through new bonds. It worked once America proved it could repay investors lined up to lend again. But from that moment on, the nation was caught in a loop. Borrow, repay old debts, issue new bonds. Bonds became the beating heart of American finance. The birth of the Fed, 1913. The real transformation came in 1913 with the creation of the Federal Reserve. Until then, the American banking system was chaotic, prone to frequent panics and collapses. The Fed was created as a lender of last resort to stabilize the system. But over time it became the government's most crucial partner in sustaining the debt cycle. When World War II began, the US Treasury needed enormous sums to fund the war effort. The Fed stepped in, committing to buy government bonds whenever needed to keep interest rates low. This ensured there would always be demand for US debt. The Fed could simply create money to buy those bonds. 1971, the end of the gold link. Then came 1971, the year everything changed globally. Back then the dollar was still tied to gold. Foreign nations could exchange their dollars for gold at any time. But as US debt ballooned due to the Vietnam War and domestic programs, confidence in the dollar began to falter. President Richard Nixon ended the gold standard, cutting the last tie between the dollar and any tangible asset. From that point onward, the dollar's value rested solely on trust. Trust that investors would keep buying US bonds. A system built entirely on paper and faith. How it works today. The US Treasury issues bonds to cover the government's budget deficit. These bonds are bought by foreign governments, banks, pension funds and investors. But when demand falls, the Federal Reserve steps in. The Fed creates digital money, literally by typing numbers into a computer, and uses it to purchase bonds. New money enters the system. The government borrows, the Fed buys the debt, and the cycle continues. Sounds impossible, doesn't it? How can a country buy back its own debt? How can it create wealth from nothing? Yet this is the essence of modern finance. Wars are funded this way without raising taxes. Stimulus checks are printed this way. Bailouts on Wall Street are paid this way. But this game has a price, and that price isn't paid in Washington. It's paid by you. The hidden tax, inflation. Every time new money is created, the value of existing money falls. Prices rise, wages lag behind, savings lose their worth. That's why inflation is called a silent thief. It's a hidden tax transferring wealth from the public to the wealthy. Today, US national debt has surpassed $30 trillion and it's still growing. Meanwhile, countries like China and Japan are buying fewer US bonds. As foreign demand declines, America relies more and more on its own central bank. That means more money printing, higher inflation and a more fragile system. History repeats itself. This isn't unique to America. Every empire has tried to sustain its power through debt. Britain financed its navy and colonies with debt until the pound collapsed. France made the same mistake in the 1700s, and soon after came the Revolution. History sends a clear message. Debt builds empires but it destroys trust. And when trust collapses, the empire follows. The dollar empire. The US can still play this game because the dollar remains the world's reserve currency. Oil is priced in dollars, global trade happens in dollars. Central banks around the world hold us bonds. The cycle works like this. America borrows, the world buys the debt, the dollar stays strong. A financial empire not built on gold but on confidence in American debt. But cracks are beginning to show. The BRICS nations are exploring alternatives. Central banks are accumulating gold. Talks of a post-dollar world are growing louder. If the world loses faith in us bonds, this illusion could vanish overnight. Why it matters to you? Because this isn't just an accounting trick. It affects your savings, your salary, your rent, and the prices at your local market. Every new bond issuance, every new dollar created silently erodes the value of your money. That's why inflation feels like theft, because it is. The system only works as long as trust in us bonds continues. But history shows trust always breaks eventually. Weimar Germany. America in the 1970s. And now the modern world. The real danger isn't just inflation, it's fragility. If foreigners stop trusting us, debt America will have to finance itself. That means even more money printing, more inflation, and a heavier cost for ordinary people. The final lesson. Understanding this bond illusion is crucial. It reveals how money and power intertwine. It shows how governments choose to borrow from themselves instead of making hard decisions. And it reminds us the public always pays the price. This isn't about politics. It's structural. An invisible machine that sustains an empire until the day it stops. So what should be done? Financial literacy means seeing through the illusion. It means understanding that government debt is never free. And that trust is the weakest foundation of all. Because when this system finally shakes, history doesn't repeat but it rhymes. Britain, France, now America. All played the same game. All met the same fate. But every illusion ends one day. The only question is when. If this video gave you a new perspective, subscribe. Because history already holds the answers. You just need to know where to look.